Good morning, everybody. Hey, welcome to Monday, April 25th. This is the last full week of April before we head into May. And we've got a few earnings coming out, and a lot coming out after the market closes today. And we'll talk about that and more in just a few moments when Dave joins us here shortly. Before we do that, though, let me just remind you that there's a lot of stuff out there we cannot control. We can't control what's happening in Ukraine and in Russia. We can't even control what's happening in Washington, D.C. But there are things that we can control. And the one main thing that you can control when it comes to retirement is how much risk you have in your current portfolio. If you don't know what that number is for you, give us a call at 863-382-0037 and schedule your core retirement design where we can help you design the retirement you always dreamed of. And with that, we got Dave coming up next.
105.7 Highlands Light FM. Leona Lewis there. Hello, good morning. Glad you're here today. It's 8:39 now. It's 21 before 9. Time to check in and see what Monday looks like on Wall Street and see if your retirement funds are still secured in one place. We haven't traded anything yet, so they're where they're at on Friday. We'll update that after we introduce Phillip Statler from Statler Financial Services, who's on the phone. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. I hope you had a great weekend. I know I had a little downtime and appreciated that time as we get ready to kick off the last week of April and the first month of this quarter.
And we're counting down the days to Cinco de Mayo and the days to Mother's Day. That means April is just about over, and this month has gone by way too fast, a little bit too fast for investors, too, because Friday was just a poopy day. Dow was down 981 points. The S&P was down 2.7%, down 121. And NASDAQ was down a full 2.5%, down 335. The oddity of Friday, Phillip, was the fact that NASDAQ was the smallest loser of the three, and they're the one that's been getting beat up by interest rate concerns and whatnot. But it was just a generally crappy day on Friday, wasn't it?
Yeah, it really was. It was not a good day at all as we continue to see this market give back and trying to wade through why. Because the earnings, like we said last week, that earnings in general have been really pretty good from the companies. And so what's really causing this? And I looked at some headlines this morning, and it seems to be China is putting some pressure on it because of their closing back down everything.
And they're getting downright draconian about it. There were news items on the weekend about guards being posted outside the apartment buildings to prevent people from leaving. They've thrown up fences around apartment buildings in Shanghai, and now the word is, because they had something like 20,000 cases yesterday alone in Shanghai, they're talking about shutting down Beijing. When we get to the Asian Rim markets, you'll see what that's done to their markets, and it certainly isn't helping us one tiny bit either.
No, it's really not, because those, all of that is supply chain driven for us here in the United States as well as worldwide. And if they shut down, we've already been, dealing with this thing over and over again. This is just going to be one more thing to slow that process down even more.
Oh, yeah. I guess that's the biggest reason why I was surprised that NASDAQ was our smallest loser of the day on Friday. Maybe because they've been beat up by the supply chain issues and the Asian Rim issues more than the other indexes have. But yeah, the blue chips really took a hit on Friday, and I can buy into China being a good part of it. Another element that was brought up that also might not have helped in the least was the Atlanta Fed released their projection for what the gross domestic product was going to be for the second quarter. And they're saying our gross domestic product growth in the second quarter, they only expected to be 1.3%. Now, if things were booming and going crazy, we'd say, okay, fine, that's a welcome break. But falling after a 6-odd% increase last quarter, and and the Atlanta Fed's one of the more generous estimates, aren't they?
Yeah, they are. They really are. I was looking at some of my numbers when you mentioned that, and my number coming out for this week is 0.8% is the expectations from my group of economists. So That's even worse than your number. And that could have been what's driving the things on Friday. But, I was running just a little calculator while you were talking, and the NASDAQ has dropped back into, it looks like, probably right at the tip of a bear market again.
Ooh, I knew we were well off the peak, but I didn't do the math to figure out whether we were there yet. Yeah, 2.5% on Friday would have to get them doggone close, because they were in the mid-teens down from their all-time peak when we were talking last week, and there obviously hasn't been any upward movement. It's kind of a bleak period. And the worst part on the GDP expectations is we're not going to get that number until the middle of the week. So we've got like 2 or 3 long days to stew over it, which is not going to help our investments one tiny little bit in equities, is it?
No, it's not. And we do still have a slew of earnings. Not much coming out this morning, but this afternoon, after the market closes, almost 80 something companies will report this afternoon, as well as the rest of this week. We continue to see numbers of earnings reports, and maybe if those things are good news and they can give us a good forecast looking ahead, maybe we'll get some bumps up instead of down.
Our fingers are crossed on that. While we talk about individual companies, got to mention the sidebar value to the little spat that we're having as a state with the Disney company. First round at the very least, I guess you have to say Florida won that spat, because after threatening to dissolve the Reedy Creek district up near Orlando, where Disney World is located, the investors at the very least are not particularly impressed with its effect on Disney, are they?
No, they're not. Get this. In less than 30 days, Disney has lost $34 billion in market capital value. That's a pretty substantial downturn in less than 30 days. Dave, I wouldn't be surprised if we start seeing some hammering and some claiming from the investors, threatening to sue the board because they have not lived up to their fiduciary duty to their stockholders.
Evidently not. Political leanings aside, it's always dangerous territory when any company dives into a political issue, because no matter what you do, you're going to honk off half your customer base. I kind of wondered about the sanity of Disney publicly going against the parental control law that they put out. I'm trying to avoid calling it "Don't Say Gay" because that was such a propaganda element, it's beyond belief. But just coming out publicly, fine, go ahead and back the groups that you favor. Do it quietly, and at the very least, you're protecting your investors. But Disney comes out publicly, prompts the governor to go on a rant about it, and now all of a sudden it's costing them, as the half that agree with the governor are saying, "That's it, I'm shedding the stock."
Yeah, that's right. I mean, they're taking a big beating. And like I said, I would not be surprised if we don't see some stockholder actions coming up here shortly, because the board has not done their job and not supported the shareholders, which is one of their jobs, is to protect the shareholders.
Now, the primary job of a company is to give a return to the shareholders, and you can be politically active without going above the board to the extent that you get an entire state legislature to the point of saying, well, that's it, we're going to pull some tax advantages. What's interesting is, from the standpoint short-term from Disney, the general read on the Reedy Creek dissolution thing is that a whole bunch of district debt that Disney used as a governmental unit in order to finance improvements at obviously much lower interest rates than they would in the private market, now all of a sudden, if this comes through, they'll end up falling primarily to Orange County up there, which will dump some extra debt onto another governmental unit. Right now, financially, short term, it's not a bad thing for Disney to dump Reedy Creek now that everything has been built and improved and ready and raring to go. But what it's doing to their stock price on the PR battle, right now the score looks like DeSantis won, Disney nothing, as far as a first inning score.
Well, it does. But let's face it, the stockholders are the big losers right now.
Yes, that's absolutely true. As we get into earnings season, you mentioned we got a boatload of them coming out tonight. The meat of the season is really just starting this week, so we're going to be hearing a lot of different reports. Only one out this morning of great value, but it's a household name, isn't it?
It is. Coca-Cola reported this morning, and they had a good quarter. They beat on both top and bottom line. They beat 64 cents a share is where they came in, expected 58 cents. They revenue was expected like 9.8 billion. It came in at 10.5. So some really good numbers there for Coca-Cola, and they're up today almost 2.2%. They're really butting their heads against a 52-week high, Dave. It is their 52-week high right now is $67 a share. And right this second, it is at $66.67 a share.
Ooh, I wonder if that's going to be a morale boost for some of the investors that are concerned about whether or not our backing out and boycotting and pulling our interests out of Russia would have a deleterious effect on some blue chips, because Coke sells a whole lot of stuff over there.
Oh, well, they sell a whole lot of stuff everywhere, right? So
Oh,
it's, I didn't see any projections or any mention of those things taking effect on them, but I'm sure they are to
oh
some
yeah.
degree.
I
They
guess, I
have
guess
to.
the part that hits me is I'm wondering whether it's going to be a hopeful sign that a business is going to be able to still grow and still make its expectations even without a presence in the Russian market. Like you said, they sell everywhere, but still, Russia's not exactly a tiny little blip market either.
No, definitely not. Definitely not. Hey, the other one I have, we talked about, this is not earnings, but this is, breaking news, as you will. We talked last week about Elon Musk and his offer for Twitter, and how the board just kind of rejected everything off the bat.
I
However,
was
they
wondering what was going on because their stock's going absolutely crazy in pre-market trading. They've got like 50 times the volume the second largest stock movement has.
yeah, they kind of rethought that position. The board did, thinking that again, kind of like the whole Disney thing, right? The board has a fiduciary responsibility to its shareholders to do what's in the shareholders' best interest, not the company's best interest. And here's a case where I think finally the board got together and said, "Well, guys, maybe we need to take this offer from Elon Musk, as much as we hate to, because it's the best thing for the shareholders." So we do see right now that there is some back and forth between the two of them. It looks like they are coming to some agreement. Mr. Musk does have $46.5 billion in financing put together in order to take that company private. That's helping Twitter this morning up 4.75% before the market opens up.
Yeah, they're within about $3 what Musk's offer for the per share price is, and that's quite an increase over what it was last week.
It is, and it's up. On Friday, it was already up almost 4% on Friday. So 2 days now, we're up over 8%.
This is going to be fun to watch this week, without a doubt. Resetting the table, it was a really, really off day on Friday. 2.5, 2.8, 2.7% drops all in one day. Almost felt like Armageddon for a little while there. 45 minutes before we open this morning, Phillip, what are we looking at?
Dave, we're not off to too much of a better start today. A slight improvement since you and I got on the radio, but we've got the Dow right now down $147. That's about a little over 0.4%. The S&P 500 is in the same boat. It's getting close to down 0.5%. That's $20. And the NASDAQ 100 is down a little over 0.4 as well, down about $59. So everything is heading south this morning. Even when we go to the commodity side of things, everything's down. Silver down another 3%. Now, Dave, I didn't have time to run the numbers, but in my head, that's 3 today. That was 2 on Friday. We got to be down 5 to 8% right now in silver over the last several days. We've got gold down 2%, down below $1,900 an ounce right now at 1,894. Not sure what's causing all that. Crude oil down 4.5%, well below 100, down at $97.47 a barrel right now, Dave.
Only one of those numbers we're happy to see for obvious reasons. Overseas markets not a lot better than any place else. Asian Rim just tanked off of the news that China was closing up more cities. The mainland Chinese market was down over 5% at the close this morning. Hong Kong down by 3.5%, and Japan followed at 2%. Europe's completely unimpressed with our progress so far this morning. They're all negative midway through their day as well. This is one of those times where a person looking at their retirement funds, if you're too heavily into equities, you're looking at them and saying, OMG, time to find out how to stabilize things. How do I find you to get that task accomplished?
Dave, that's the one thing that people can control in their portfolios, how much risk they have. That's why we developed the core retirement design to help people design the retirement they always dreamed of, and to make sure that the risk they have is the correct amount of risk for their current situation. Give us a call at 863-382-0037. Also, you can catch our Statler Financial radio show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And hopefully tomorrow morning back here on Light FM with a little bit shinier and smilier news than we had this morning. Fair enough?
Fair enough, buddy. You have a great day.
I'll see you then. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us today. As we head into Monday, it's not looking really good. We'll continue to update you as we look at the results of today and how tomorrow starts out. I hope you'll join us again tomorrow for Phillip and Dave talking on the radio, 863-382-0037. Until tomorrow, have a great day. Bye now.